Good morning, Miss Christina. I know it's cold out there in New York, but it's cold in Florida too.
Yeah, it's cold in
Hope
Iowa
every-
too.
oh yeah, forgot that's where you
It
at.
has.
Yeah.
It's like 18 degrees.
Whew, dismal. I woke up. I had to work. It was 38 degrees. I was about to call in. Well, I'm working this weather. This is ridiculous. All right, so everybody's here. That's going to be here, and if you ain't here, you'll get the recording. Welcome back, everyone, for week 2 of the Art of Options. This week we'll be going over. Well, last week we went over everything that we're going over in the 6-week course, but this week we're going to break everything down. So when you go back and watch the first video after the course is done, you'll be able to understand everything I was talking about. So this week we're going over calls, puts, strike price, the premium, expiration date, websites where you can find news on the stock that we're getting into. We're going to go over the Discord for anybody who just wants to really start trading. And if you have an account already set up, I'm going to show you where to get your trades and how to find plays in there and how to start a watch list on Robinhood, and I'll put it on Webull too. So for the first things first, I'm going to share my screen. Screen is sharing. So here we go. I'm going to pull up Robinhood. So first thing we're going to talk about are calls. Now calls are, to break it down like a C plus student, calls you're expecting the stock to go up. Point blank period. If you think the stock is going to go up, you play a call on it. So right now I am pulling up an AMD. I played an AMD call because I expected the stock to go up, and it's actually going up. So that's what calls are. So when you are in the Discord, and I'll show you guys this also, when you're in the Discord, you'll see a little C next to a number. It will say call too, but sometimes you'll just see a little C. That means they're playing the call. Now, for puts now are for if you expect the stock to go down. One, like I said before, you seen that one, the CEOs of Apple was on Epstein's island. You know what I mean? That's some bad news to be out there. So you want to go put a put on the stock because you expect the stock to go down a little bit. So instead of hitting call up here for Robinhood, got calls and puts. When you're expecting it to go down, you'll hit a put. Now, next thing we're talking about is the strike price. The strike price is on the left side of the screen. Right here, I picked a 177.50. When I played this particular option, I think AMD was at 165, 168 or something like that. When I picked the 177.50, I'm expecting AMD to get to 177.50. I'm actually expecting to get to 180. So I played a 177.50. It cost me $107, and now it's up to $294. I'm still in this one. But strike price is the price you're expecting the stock to hit. Meaning, if you've seen this Monday morning and you've seen some news on AMD saying their new chip that's coming out is going to help everybody in the world connect to each other a lot better, and you're thinking that the stock can go up to $210, all you do is come up here, click on $210 strike price, and you add that to your options. Hit the little plus button, and boom, you can purchase that option if you want for $10 because you're expecting AMD to get up to $210 because you wanted to call on it and you seen the news that they had on it. So that's basically a call and a put to break it down, and the strike price. Strike prices are very important for you to for you to get that. It doesn't have to get there for you to make money. You can always get money on the run up. I will explain that too. As long as you get the option, whatever one you buy, if the stock is still going up, let me go to a chart for you. If the stock itself, you got $180 call option that's out the money. nowhere near where the price is right here. So at this point is 162. So if you played a 177 like I did I expect it to get there yesterday? No, I didn't. Friday. No, I did not expect to get up that high Friday. But as it was going up, that option contract was making money. I could have sold it at any point I wanted to in this whole Friday, this whole day, because it was still going up. But while it was going up, I'm like, you know what? I'm not going to sell it because it's still going up. I might as well just let it keep riding out. That's my greediness. I should have sold it because I have a nice profit on it. I don't know if this is going to come back down Monday, but you know, that greed is a terrible thing in the market. You know what I mean? Especially when you pay $107 for something and it's up $229 right now. So did I want to sell it for, 50% profit? Yeah. But after it went to 60%, I was like, shit, let's see if we can make it to 80%. It made it to 80%. And I was like, fuck it, let me see if we can make it to 100%. Not the proper way of trading. You don't go broke taking profit. That's one thing I preach to everybody. You don't go broke taking profit. There's always going to be a trade that you can get into the next day or even that same day. So always take your profit. Don't be like me when it comes to holding on to stuff. But on the flip side of that, if you know how to read a chart and understand chart analysis and what's going on in the world, as in what the Fed rates are going to be, then you can actually gauge which way the stock is going to go. And secondly, pop these guys in real quick. After you understand all the little ins and outs of the market, you can gauge which way the stock is going to go, so you can stay in it a little longer. But at the beginning, before you buy an option, you want to know what type of percentage you're trying to take. And when it gets to that percent, take it. But if it gets over that percent, hey, you can let it rock out. Just don't let it drop down back past that percent. You always want to walk away with something. So let me go back to the option chain. So that's the strike price. And like I said, you can make money on the way to your strike price, so you don't have to actually buy down here in the money. You can make money on the way up, just in case you don't have this much to put on the option. This one will be 388, and this goes into the next thing we're going to talk about, the premium price. Now, the premium price is the cost of the option. That's all it is. The more in the money you are, meaning if you're going for a call and it's 175.89, anything underneath that number is considered in the money. So 175.89, so 175 is in the money. 172.50 is considered in the money. So when they're in the money, the premiums are a little higher. So this one will cost you $5.10. Since this one is closer to the dollar amount, it's going to cost you a little less, but it's still $388. Now, the further you are out the money, meaning you're not next to the strike price, your premium price will become cheaper. So the higher you go away from the price, the cheaper the premium price. The reason being for that is they're not expecting it to get to $205. So they'll charge you $15 to let you rent their shares because they don't think it's going to get up there. They're going to take your little $15. You might lose it. You know what I mean? They don't care. They're going to get their shares back. And they just got $15 off you real quick. Same thing with this $24 one. They don't expect it to get to $200 by next Friday. So they're going to sell you this, rent this to you for $24. You're going to be like, okay, I got a $24 contract. If it runs, let me take my money before the contract expires, which is next Friday. And if you make the 30, 40 bucks, you might sell it. Some people won't sell it. So no matter what, this person right here, they got their $24 and they're happy because you are way out the money and they know at this strike price, it's not going to get there by that day. But the premium price, the higher you go, the cheaper it gets when you're going for a call. And the further down you go, the more expensive it gets. So what I like to do when I'm looking at premium prices, I look at my account. How much do I have in my account? So if I got $1,000 in my account, I'm usually going to look for something around 200 to 250 bucks to play with. That's all I will spend because I like to keep buying power and stuff. So when I come to the option chain, I'm looking for a contract between $200 and $250. So that puts me in this range right here. So that means one of these two I would buy. This is 216, so that's under 250. This is 159, so that means that's way under 260. But I will get one of these two and then see how that treats me and go from there after that. But it's always good to have a price that you want to spend on your option. Now, next thing we're going to get into after that is the expiration date. The expiration date is right up on top, right next to your call and put, buy and sell, right to the right. Click it down. Expiration date means the day the contract will expire. Now, the day the contract expires depends on how much you want to pay for the premium. Excuse me. Okay, so if you want to go out to the end of February, which is 33 days away, I'm going to click on that. Now, as you can see, the premium prices are way up. Strike prices are still the same, but the premium prices are a lot higher. Reason for that is you have 33 days for AMD to get to 177.50, and it's in at 175.89. So now it will cost you $953 for this contract, but you have 33 days for this price to get to here. 9 out of 10, the way it's moving, because it has moved. Let's see how much it moved in a week. Okay, so in 1 week, it ran $29. So now we have 4 weeks for this to run $2.21. So I think it will definitely run $2.21. But since we've just seen it run $29, let's do a hypothetical. Let's say hypothetically you buy this for $953 and it runs $29 again. We'll call it even 30. So now the stock price is $205. So rule of options is this line will go up to $205. So this line will be way up here, right? Now, since we bought this particular contract, this contract now will be way down here. So let's see what that price would be. If it's $205, it's a little trick you can do just to see where your contract might be. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9 slots it will have to move for it to get to 205. So since we bought this particular one and it actually did get to 205, we have to move this down 9 slots. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so right here, $2,315. That contract that we paid $953. So we basically doubled our money, 118% around there. So in that 1 week or whatever, how long it took to $29, you just doubled your money. Now we still have 21 more days left on that contract. We could hold it or we could sell it, but if you actually held it and it ran $60, 30 and 30, you can bring this down from 155 because that's where it was at. Now you're going down to 125 because it ran another $30. So now 4,900. So that $993 just turned to $4,973 in 2 weeks. All this is theoretical, but if it kept running the way it's running, that's a big possibility that that can happen. So expiration dates are important because it gives what we call time on your contract. If I want to do the weekly, so next week this expires, as you can see, prices are a lot cheaper because you only have 1 week for it to get to a certain price. But when you buy time, meaning buying time, like this price is $294. If we go if we go out the week after that, that price now is $683 because we bought a little bit of time. Now we have 12 days for this particular asset to get to 177.50. So that's the particulars of the strike price. If you want a call or a put, make sure you got enough for your premium price because that's how much the option is going to cost you, and what expiration date you would like for your option to cook for, because that's what we like to call it. I let it cook. So the longer I get it, the more it's cooking. If I go out 2 weeks, I'm letting it marinate for a little bit, just because if I'm spending $780 on a contract, I'm looking for at least 40%. You know what I mean? Closer to 50. But if I get that 50% in a couple of days, and I still got 15 days left, I'm still letting it cook. So it's going to just keep going. You know, you can always cut your profit, meaning if you're up and it start coming down and you're losing profit, you can cut it, but you never want to lose the money that you put in, because the premium price is the price that you actually pay. So $680. You can't lose no more than $680. That's the max you can lose. But you don't have to lose it all. The only way you can lose it all if the stock goes the opposite way, meaning it goes from 175 all the way down to like 160, and you have a couple of days left on your contract for it to expire. So now this 680 maybe down to 515, then drops down to 296. So you can always cut it. You know what I mean? So you're not losing all your money at once. But you know what I mean? You definitely don't want it to drop down to one of these numbers where it's like $19, $10 for the contract after you just spent $780 or $680 on it. I did that plenty of times before. So if you do it, don't worry about it. It ain't gonna be the first time, and the damn sure won't be the last time somebody does it. I still do it to this day. I'll spend $500 on a contract and be pissed because I'm angry that the shit ain't go to the direction that I picked, and I'll just let it go to zero. And I shouldn't be doing that, but it happens all the time. Like I said, the greats do it. So those are the main attributes of finding the option. Strike price, your premium price. Do you want to go up for a call? Do you want to go down for a put? And the expiration date. So next thing I'm going to get into is actually how we find what play to play. Best thing I like to do, first thing I do, is really go to the Queen of Trades Discord. If you guys are members, you should know about it. If you're not members, this is where most of the trades come from that we find. Is my screen still sharing? You guys can see the Discord that's up or no? I can get a 1 in the chat just to let me know if you can see my screen. That'll be great. How about now? Perfect. Thanks, ma'am. Okay, so at the Queen of Trades Discord, it has a lot of information when you become a knight. So I had to write it down. There's so much. So first thing you want to look for is the morning watch list. When you go to the morning watch list, this is Queen's nightly routine. She goes through the market, combs everything, see what they're doing, and she'll put basically a newsletter out of what she's looking at. And then let me move this out the way because I can't see. And then she puts the price points in for the stocks. So right here, SPY, the average true range is $4.13. If it's over 480, it's a go for a call. If it's under 470, go for a put. That's what it is. 480C greater than 475.90. So if it pops over that, go for a call. Pops below that, go for a put. Now she has this for SPY, Qs, Amazon, Apple, Google, Meta, basically the Fab 7. So this goes out every morning. So if you're not, if you have a job or you got shit to do, you got kids to get ready, first thing you do is, when you're in the bathroom brushing your teeth, pop up the morning watch list. It will give you just a quick outlook of, hey, what can I get into? So here's just her list. So you can always just go to the list, see if it lines up with the things you're looking at, and then go from there. Next thing is the daily news. Everybody knows news drives the stocks. News and news, really. You know what I mean? Because when people hear the news, it's either going to drop the asset or it's going to raise it up. Now, can't make this bigger, my bad. Now, what we do here is we buy the rumor. Just like my boy Buffett said, Buy the rumor and you sell the news. Damn, you can't see this. Sorry about that. So when we see the news, she's popping out news. We're like, okay, what's going on? We see what's happening. We see what percent the stock is up or down. We see why the stock is up or down that way. And we decipher if the news is good news or bad news. And the market, good news is going up. Bad news means it's coming down. So now you have a little summary of everything that she found throughout the last 24 hours. And she puts that in for her daily newsletter. Next thing is notable earnings. Earnings is a big play when you're playing options, meaning the stock's earnings. So every quarter, every week, they put out earnings watch list. The different stocks is having their earnings. Now, usually I like to play earnings, what they call an earnings run up. So if the earnings are on Friday, I'll get the stock on a Monday and literally ride it up until the earnings, and then I'll sell it right before the earnings. Because when the earnings come out, they can have good earnings and the stock can drop. They can have bad earnings, the stock can go up. Earnings is hit or miss either way. You know what I mean? If you're in it and you want to play, you want to play a lotto ticket and get in and actually run for you, you will make a lot of money. Not gonna lie. But I usually get out before the earnings, then I'll get back in after the earnings done said and done. But this is where you come to see what companies having earnings and go from there. You can actually, play it that way too. Let's see, it was January 15th, so that's last week. So the new one will be out Sunday for the earnings coming up. So that's another basically a cheat sheet. If you know stock earnings is coming up, definitely go play some until the earnings, and then get the hell out of it before the earnings come out. If you like being like me, get your little 30-40%, and you're good to go. Next thing we have are upgrades. Upgrades and downgrades, I'm sorry. Now, an upgrade of a stock is basically the big wigs get together. They're like, okay, we don't like Zuckerberg, so we're going to downgrade Meta 1%. We're going to have it from 420 to 350. That's their target price. So Meta could be say at 500. They're saying it's going to get down to this price, so they're saying it's a downgrade. So the big wigs just decide which they think is going to happen, and this is not going to happen right now. This is over basically a 6-month to a 12-month span that they're saying this stock is going to perform like this. Sometimes it doesn't do it. Sometimes it does. You know what I mean? It just depending on what asset they're talking about. But figuring out upgrades and downgrades, that's always good for the option side of it, because if a stock gets a good upgrade, you know what I mean, then you can go buy your option, make some money, call it a day. Or like Boeing right here, if they have a plane that crashes, they usually they downgraded them every time a plane crashed. They downgraded, and Boeing just kept tanking. So sorry for the people that lost their lives, but puts on Boeing was really hitting that day. They was definitely printing money. But that's how news influence the stock prices. You just don't know what's going to happen until it happens. Let's see. Now, trade alerts. This is where I'm King Flex in the Discord. This is where I call out my trades for my options. Queen Flexes, this is where she call out her trades. Her trades are usually called on this nice little pretty setup like right here. So as we went over in the beginning, you'll see the ticker, which is the stock that is in the video. You'll see the strike price, 585 is a strike price, and she has a C next to it, means a call. Expiration date 119. So you'll go to the expiration 119. You'll look for a 585 call, and she paid 170 for it. By the time you see this price might be 190 or it might be 130. It doesn't matter because she's still in this actual contract. Same thing with me. If you see me put out a price that I got the contract in, 9 out of 10, I'm still in that contract until I get my 30, 40, 100% return. So you'll come here, you'll see this type of call out. Go right to your Robinhood or Webull. Type in the video. Go to your trade options. And you will look for a 585 call. Now, she did that last week for this Friday. Right here, NVIDIA is at 594, which it closed that Friday. And this contract right here is worth 1,700. That contract that she called out, I think, got as high as $900. Go back to the Discord. Yeah, I think this particular contract got as high as $900. So you could have paid 170. You might have got it cheaper because it might have dropped. But at the end of the day, it would have closed out high point of 900 and some change. So that would only cost you 170 bucks. It's an AMD contract. I called out. Strike price. Oops, not this one. That's my strike price at. Oh, here we go. Oh, it's a NVIDIA. A NVIDIA 582.50. I called out. Cost me 142. NVIDIA closed at 594. That contract actually got as high as a 1,400. But I was doing my 3.5%. That's all I'm expecting to get. So when it ran to this 32%, I sold it. You know what I mean? But if I would have held it until Friday, it would have been $1,400. Does it suck? Yes, but we're traders and there's always going to be a trade to get. And this basically shows you that somebody's going to have a trade in here. Somebody's calling out trades. So this is where we find trades at. If you don't want to look through all the news and have time to chart something, you come here and you'll find a trade and get into it if you'll like. Other channel in here is her YouTube channels. Has a lot of stuff on charting, chart analysis, candlesticks, all the stuff you need to know if you're going to be trading, quote unquote, on your own, meaning you're not going to take somebody's call outs, or you're not going to sit around and wait for them to say, hey, I'm in something. Hey, I'm getting out of something. You know what I mean? Where you really want to learn how to do something yourself, this is where you'll go. It will definitely help you get the analysis of everything better understanding of it. And she's also doing a group class too one day. That's a little plug. So that's the Discord. That's one place you can find news. Next place is Benzinga. Now, Benzinga just is nothing but news. You know what I mean? But like we said, we like to find the news to understand what the stock is going to do. Weekends, that's what we do. We just look around, see what's going on. And I knew DeSantis was going to pull out. Trump 2024. I know a lot of people don't like Trump, but if he gets elected, just know what a call option is. That's all I have to say. If you can play a call option when that man gets elected, you will make a lot of money. But all you do is come here for news. It'll tell you a little bit about everything. You got earnings in here, different dividends. I like dividends because when I'm playing the option, anytime I win some money, I go try to buy me a little dividend stock. So definitely check out all this stuff on this page. Then you guys, all natural CNN. Most of these sites do tell you the same exact thing, but it's, like I said, it just gives you something to look at. The more knowledge, the better. The more reading, the better. You know what I mean? You can definitely find out what's going on in the world. Next, CNBC, same thing. They all, like I said, they're all basically the same exact platform, but everybody has a little bit different things on it. Now, always be prepared for typos. Sometimes these platforms, I don't know if they do it on purpose, but sometimes say Tesla's earnings is coming out, and on CNBC it will say Tesla missed earnings, but on CNN and Benzinga it will say Tesla actually beat earnings. The stock will go up and down just because don't nobody know which way it's going until they actually get proof. But like I said, be careful of misprints. Always want to check everything you see on one, make sure it lines up with everything else. Okay, that one, yep, that one's done. Oh, one more thing for the Discord, let me bring this up. Stock tweets. Can't forget about that. Now, she has this Jarvis alert. It's pretty dope. It basically alerts you when the stock is coming to a certain trend, coming out of a trend, going into a trend, breaking a different level, breaking a different zone. All this stuff you'll learn eventually about, looking at this chart. You probably, new traders probably don't know what this chart is, but when you get the hang of it and start going over charts, this will be second nature to you. But this particular tweet will let you know, hey, this just broke this level. This is a good time to go check out the play. You know what I mean? You go check it out, see if it really broke it, and then you can play along on it. Or if you caught it late in the day and say this is the 5-minute chart, and this went up here, then it went up to this next green candle, then this red candle came up to indicate a reversal, and it came back down. So you could have played a short at the top of this candle and rode it right back down to this line, and hopefully it would have broke through this to past this line. But this is just a place to come to. Stock Tweets Jarvis, my man. And let's see, one other thing. This is the flow chart. This is a big deal when you're playing options. This basically tells you where the money is. We like to follow the money. So the green bar indicates a call. The red bar indicates puts. This little 7.5, that is the strike price, and how much are they betting. Over here to the right will tell you how much they're actually spending on the particular option. So $607,000 they put on this particular strike price for this to come down. So when we see stuff like this where it's a lot of sellers, I mean, they're buying up puts, we're going to buy puts. Why wouldn't we bet our $200-300 when these people are betting millions going in the same direction? I don't think they're trying to lose no money. I damn sure ain't trying to lose no money. But when you see something like this, you go look for the news on that particular asset, go to the chart on that particular asset, and you're just basically following the money, seeing why they're doing this, why they're pushing this stock down, or why they're pushing it up. But that right there is definitely a cool indicator, and it gives you a little more insight on what the big wigs are doing. Because like I said, we don't trade like we're retail traders. We're all retail traders, but no, we follow the money. You know what I mean? We do have a lot of systems that we pay for that gives us this type of information. You know what I mean? So when we get this type of information, oh yeah, we're gonna follow it. Let's see, let me get a good one. Okay, so for ARM, you have one that came in for $2.5 million. So they're betting $2.5 million. So yeah, I'm gonna put my little $100 on this play, and hopefully this shit work out for me. You know what I mean? Because like I said, they're not betting to lose, and there's a lot more greens than red. So that means they're definitely gonna try to push this stock up to at least their strike price, or at least close to their strike price. Because when you bet a lot of money on something, you don't need the percent to be a lot. So when you got $10 million on it, you're happy when that option runs 10%. You know what I mean? But when you got, $50 on something, you ain't happy when that option runs 10%. It's only $5. So you like to, you know what I mean, put some more money on it. The less percent you need, you're making a good amount of money. So these institutions are literally dumping millions of dollars on shit, waiting for it to go up 5, 10, 15%, walking away with millions, and then reversing that same play, but going the opposite way. So now let's go to, I'm going to go to Robinhood and Webull. I want to show you guys how to get your watch list up. Watch lists are very important because now you're not scavenging the whole interweb to find some shit. You know what I mean? You actually got a watch list. It's going to be on the right side of your screen. So for my Robinhood people, real quick, how you start your watch list. You go up to the search bar, type in the stock. When the stock comes up, sorry, on my watch list. My bad. Gotta get a stock that ain't on my watch list. What don't I have? What don't I have? Don't know. Got a whole bunch of random shit. Got you. Okay, here we go. TSM. Right side of your screen, it will say add to your list. You click add. Now, I have a whole bunch of different random lists that has different stocks on them. So you can create a list, or you just, they should have just a regular one up there for you already. But just click on which one you want it on, Save changes. When you go to your home page, it will be right there. The importance of a watch list is, like I said, so now you don't have to look for different assets. You have them right here. They tell you what percent they're moving. You always keep an eye on them. You know what they're doing. You know if one ran $10 in one day or one dropped $20 in one day. Now, 9 out of 10, what goes up must come down, or what goes down must come up. You know what I mean? So you can always decipher which one you want to play by keeping an eye on your watch list. So you go up to your search, type in the asset you want to put on your watch list. I will give you guys a few of those to put on them too today. Lemon, hit add, pick which one you want them in. Boom, that's it. Hit save changes. Now for my Weeble people, Weeble same thing pretty much. Go up to the symbol, search your symbol, see I got Home Depot on here. No, Home Depot's one. So for this one though, whatever, when you type up a symbol, you'll see the little star. You just click on the star, add the watch list. Same thing, you can pick which watch list. I have a whole bunch of them, so you'll just have your portfolio. That's what it starts with, and then you can add other watch lists to it. Click it on your portfolio, and now boom, there it is. So that's how you start your watch list. Well, that's how you add to your watch list. So now let me give you some stocks for your watch list. Just gonna go to mine. I want to call them out. Like I said, this thing is recorded, so you guys will have it. Just go back to the recording. I'm not going to do them too fast, though. But you would definitely want, start from the bottom, you would definitely want Bowen. Bowen's a mover. And what I mean by mover, options might cost you $200, but Bowen could run $20, $30 in a day. Typical option is every dollar move, you make $100, between $80 and $100 every dollar move. So if something moves $20 in a day, you just made yourself $2,000. So we have Bowen, triple Qs, QQQ. That's your tech sector. They're pretty big. SPY, top 500 companies. You can trade them. Now, this is not the big SPY, which is, I want to say, $4,000, maybe more. This is the little SPY, but this is actually still the 500 companies. The shares are 482, but the options are daily. So these options are a lot cheaper than your typical weekly options. Like we talked about for the strike price, these ones expire every day. So if a whole bunch of companies get great news, you see everything running, you see SPY moving, you can literally go find something that expires that same day or the next day. The option won't cost you much because you only have 2 days on the contract. But if it's moving, it definitely can make you some money. But SPY and Qs are the two that have daily options where you can literally trade them by the day for the expiration date. Okay, you want Tesla on there because Tesla is the animal when it comes to options. Options cost a lot, but the better you get out trading options, you're going to definitely want to trade Tesla. Meta, Facebook. I know Meta, Facebook is for old people, but it's tech and it definitely moves. Options are great. They definitely make you a lot of money. Same thing with Netflix. Netflix is a good one. All these ones I'm calling out are for options. Now, if you want to put $1 on them, you know what I mean, to have in your portfolio, that's another thing you can always do because now you got $1 on all these. It's in your portfolio. Now, if you look at your portfolio, like, oh shit, I'm up $1.10. You know that stock is moving. So now you can go in there and look for an option play because you know that stock is moving because you only had $1 in there. Vice versa, I only got 80 cents in there. You know that stock is dropping. Go in there and try to find a put on that stock. But you want to always have something. Visual is always the key to always seeing what's going on. Amazon is great. Amazon options aren't that bad. Definitely cheaper than what everybody would expect because Amazon is everywhere. but not bad for the options. Let's see, in the money, you can get an in the money option that expires next week for $215. So that's a pretty good deal. Now, when the premiums are low like this, and for a stock, that's just telling you the stock is not too volatile, meaning it's not going to move too much in a day or two. So for this stock to get to 157, yeah, it might take a while. You know what I mean? So the cheaper the premium, the less the stock moves. The higher the premium, the higher the premium, the faster the stock moves. So this is only $1 away, and it still will cost you $1,100 because this stock moves so fast. It will definitely blow through that with no problem. But going back to going back to Amazon, Amazon don't move as fast as Nvidia, so your options just won't move in that direction too quick. So it's just not going to be as much. So it's a good thing to get. You can definitely have fun with spending $200 on this. Might get you $300 or $400 return. But if you spend $200 on the video, that $200 on the video might get you an $900 return. All depends on movement. So far that was Boeing, Triple Q, Spy, Tesla, Meta, Amazon, Netflix. See, we got Microsoft. Google has two Googles. They're both around the same price, but both stock do a little bit different movement. So I always put both on the list. Usually when one's going up, they're both going up. When one's going down, they're both going down. Now, the inverse of Tesla is called TSLQ. Since I like playing Tesla a lot, it does run up. And when Tesla runs up, TSLQ will come down. And when Tesla's going down, TSLQ will go up. So in the mornings, if I'm seeing this open up red, I know Tesla's up. If it opened up green, I know Tesla's down. So I always keep that on here just so I can see that. Now, last but not least, actually, no, I got a couple more. But Chipotle. People wouldn't think Chipotle stock will cost $2,300 for some burritos. But Chipotle is a monster when it comes to the stock market right now. The options are no joke, meaning they cost a lot of dough for these options. But it moves. This weekly will cost you $2,200, but usually Chipotle moves maybe $20 to $40 in a day. You know what I mean? So you get 2 good days, boom. Your price that you paid $2,200 for is now down to at least $3,700. It's a high risk, high reward type deal with this one. And Amazon is low risk, medium reward. So it all depends on what type of trader you are, as in your risk tolerance. If you got high risk tolerance, you will be playing the big boys. If you have low risk tolerance, 9 out of 10, you'll just be playing the smaller stocks. But either or, you can't go broke taking profit, and all money that you're making is good money. And there's no really wrong way of trading except losing all the time. Only wrong way of trading. You got to get in how you can get in. So Chipotle is CMG. That's the ticker. Next one is Intel. Like I said, I got a lot of tech on here because that's where the world's going. Anything with AI is always good. So their stocks usually move together, tend to move together. AMD. AMD is NVIDIA's little brother. If NVIDIA is moving, AMD is usually moving right next to it. That's why I wasn't able to get a NVIDIA call this week. Besides that 582, but I sold. I wasn't able to get back into it because they were just going too high. It was higher than what I wanted to pay for it. So that's why I got the AMD, and that AMD worked out for me. And Coin is a good one. Bitcoin running. 9 out of 10. Coinbase is running. Coinbase's stock. Anytime cryptocurrency is moving pretty good, Coinbase stock is actually moving pretty good. Right now, it's basically on sale. 2 weeks ago. Yeah. Yeah, 2 weeks ago, coin was up to $187. And it dropped all the way down to 124. So if I would have got a put way back here for February 1st, if I'd have bought it back in December, got it for February 1st for a 185 put, and it's down $24, that's basically that contract would have been $6,000 plus, maybe even more. But I didn't do that. That's the power of options, though. Because if you're owning the stock and it's going down, you just losing money. It is what it is. You know, you're holding long term anyway. But if you're holding the stock and you're noticing your stock is losing money, now you go put an option on, and now you're at least making money from your option, but you're losing money from your stock. But you're hedging it. You're not losing too much because you're making the money on the option. And shit, theoretically, you probably would have made more money on the option, even holding the stock, and the stock losing $40 in 1 month. If you had to put on it, you would have made way more than the stock lost. So that's always the good thing. You're just covering your ass on that one. Okay, so coin, AMD. Okay, went over those. Okay, we got a couple more down here. Mara, MARA, and Riot, RIOT. They both run with Bitcoin, and they both drop with Bitcoin. Now, Bitcoin news, Mara and Riot usually moves with it. Bad Bitcoin news, Mara and Riot drops with it. But those are decent options. You can get multiple. You don't have to buy just one. You can buy 5, 10, whatever. But their option contracts are priced pretty fairly. The stock price is only, Riot is $10 right now. You want to play an option on it in the money. And the money option will cost you $69, under $100. So if you're doing a 3.5% challenge like I'm doing, and you had 200 to play, you'll go get one of these way down here deep in the money, let it go up a little bit, make your 3.5%, and then you'll sell it. This is basically a guaranteed win. Anytime you're way down here deep in the money, as a matter of fact, a guaranteed win basically is deep in the money over a month out. So if it's 10.25. If I went and spent $190 on this $9 call, meaning Riot needs to be above $9 by February 16th, it's already above $9. So every time that goes up 1 penny, you're going to be making money. 2 pennies, you're going to be making money. You're not going to be making the pennies. You're going to be making a couple bucks. So if it goes up 10 cents, you might make $8 on it. If it goes up $1, you might make $60 on it, $70. So you'll make your 3.5% better when you're deeper in the money, which is way down, and further out with the expiration date. But Riot and Mara, like I said, options aren't too bad. We have Disney. I like Disney just because, I go to Disney every now and then. I don't like what they became. I was a big Marvel fan. The Marvel movies ain't too good now, so Disney's been dropping. So I've been playing puts on them every now and then, making a couple bucks. But their options don't move too well. Meaning, option costs you $100. Disney might move 50 cents in a week, 80 cents. You know what I mean? It takes a while for Disney options to cook. So you definitely got to get some time on those. Let's see what else. MU, it's another tech stock. Chip stock, they're pretty dope. Their options aren't too expensive. So definitely check them out. MU, add them to your watch list. Alibaba, BABA, that's a good mover. It does make some money. You know what I mean? And the options aren't too expensive. Basically, that's what all I'm trying to break down right now is trying to give you good stocks to get into. Options are going to be varied for everybody's price range. So you'll definitely be able to find something. And if you're in a Discord, like I said, you'll be able to see what's called out. It's on your watch list 9 out of 10 times, so you can just check it out. Go in there, see what the prices are, and see what you can do. Roblox, yep, another good one. RBLX. You have Apple, OG giant right there. Apple's a great startup for option traders. Apple's a very safe stock. It's usually going in one direction. Very simple to get calls on it. I like getting in the money 2-3 weeks out, and Apple will cook for you. The news drops just like daily with them. New iPhones, new car, new vision, AI glasses, and everything. So easy to find news on Apple to see what they're about to be about. Let's see what else. You know what? That's it for this week. That's all the stocks. Yep, I'll give you guys some more next week. That's a good list to start with. So, a little recap of what we talked about is number one, finding the option. How do we find a place? Run to the Discord real quick. Boom. You go to Queen's channel or my channel. We're gonna stop at Queen's. You scroll up until you see one of the little implants. I'm sorry, embeds. Scrolls right here. We find one. So now you find it. We're gonna pretend this date is next week. So we see an AMD 160 call. So if AMD is not on your watch list, you'll come type it in. Hit your option trade button. Find you that 160 call that she called out. And boom. Expiration date, the 26th, which is next week. Boom. And that's it. Now you purchase the option, and now you're seeing how much money you want to take from the option. So that's how you will find your options real quick if you want to do it that way. Or if you want to sit down and relax and really look at it, you'll go to your Benzinga pages, CNBC, CNN, see what everybody's talking about. Follow this down, just keep looking. Okay, nothing major. Nothing major. See, shit happening in DC. But nothing on any companies really. See ya. Oh, nope, that's nothing. So, but you'll just come down, try to find you something. Let's go to business. Okay, Ford is cutting back on the F-150 Lightning. If you see shit like that, like, okay, that looks like Ford might be coming down because, you know, they're cutting back on the F-150. So you'll go back to your Robinhood or Webull, type in Ford for your search, which is just F. After you've seen the news, you look at the stock, well, okay, it's not moving too bad. It went up 1%. That news just happened 2 hours ago, so Monday might come down. You know what I mean? That's how you got to think about it. Or if that news is good news to you, but okay, Monday it might come up. So you're coming in here, these options ain't going to be at the same price Monday. Because at 9:30 when the market opens, these prices will change. But you'll get a good, price range of what you want to play. So boom, you come here, see how much you got, see what you want to do on the forward news that you just seen on CNBC. And then, like I said, you got CNBC, Benzinga, the business page. You can Google, just type in the fucking Google what stock you want to hear about. And usually all the shit comes up on that too. That's another good one. And you have the morning watch list. Don't forget about that. Great setups, meaning all the charts that she had aligned. Pull up a chart. So she has a chart up, and let's say she has some indicators on this chart that's showing her that these setups okay, so she has indicators on her chart and she's looking at different things. If something's breaking the level that she put up, she's like, okay, that's a great setup. So right here, Boeing, NVIDIA, Apple, they're all great setups. So that's just telling you, hey, let me go look at this and see how great that setup is. Let me see for myself. You know what I mean? And if it matches up with what you're looking at, boom, you can play that particular asset with no problem. Let's see. So, are there any questions for me? I know I'll be throwing mad stuff at you. I'll be trying to slow down and stuff, but I'll just be excited to teach. I got something in the chat. My bad. I wasn't even looking at that. Let me get a second. Let me see. Oh, nope. That was Rosa. I was in trade. Rosa's always in the trade with us. Rosa's like a great team player. Okay. Okay. So, okay. What about charting? Is there a particular time frame we should be using the chart? Does this contribute to the price that we choose? Am I off the mark? No, you're not. Okay. I'll break that down. Going back to the charting. If you are trying to swing the trade, you're swinging it. You know what I mean? You're holding it from today till tomorrow. You'll go to the 4-hour time frame or the daily. And so you can get a nice perspective of what's it doing. On the daily, it looks like it's going sideways. On the 4-hour, it's going up a little bit. You know what I mean? So you'll come here, you type in your support and resistance, type the lines in, get you a nice little trend line in there. After you got your 4-hour trend line, your 4-hour support and resistance, you drop it down to the hour time frame, the 15-minute, just to see if it's near your support and resistance line. And that's how you use the particular time frames for that. So if you're a scalper, day trader, or a swing trader, that's how you have to pick what time frame you would like to be on. You're a scalper, 1 minute, 5 minute, maybe 15, but if you're scalping, 1 to 5 minutes is great. If you're swinging something, definitely the hour, 4-hour daily. But if you're day trading it, you can look at the 15, 30-minute, hourly, and you can get you a nice day trade out of that. Okay, let's see. Does this contribute to the price that we choose? Not necessarily, because if you're looking at any particular strike price, it depends on how much money you have. That's what really contributes to what you're going to choose, is how much money are you willing to bet on this particular trade. So if you have $200 and you're trying to scalp, all you got to do is go in there, find your price point that you see as a good entry, and then you go find that particular option for $200. Like I was saying before, the option don't have to get to your strike price. So let me get to a better option so I can explain it a little better. Okay, much better. So, like I said before, you don't have to get to your strike price for you to make money. So, if you only had 200 and you wanted to go in a certain direction and you're scalping, you're like, I'm about to get in and get the fuck out of it. You will come here and play this 133 call. It will cost you 183. And within 2-3 candles, if you're looking at the chart and you're on the 5-minute time frame because you're scalping, and you get 2-3 candles in your direction, you're getting out of it. So that's all really boils down to what you really want to do and how much you got to put on it. But like I said, you can always get out the monies and still make money on the way up. And no, you're not off the mark. Hope that answered your question. Any other questions for me today? Because next week we'll be going over basically the rate of decline, theta, delta, basically going over the Greeks, and starting to talk about selling cover calls and selling cover puts. I will also be giving you guys trades for the week. For anybody who's actually want to actively trade, next week you will get plays from me for the week that I'm getting into, or I'm actually into. Like right now, I'm still holding AMD. After you purchase your option, this is what your option will be like on Robinhood. Market value, what it costs, how much it costs you, what your break-even price is, how many contracts you have, the date you bought it, today's return, total return. I started the day Friday with 6 of these contracts. I sold 5 of them. But if I would have held all 6, that's 6 times basically 300 to 1,800. Well, actually 17 and some change I would have had. At its high point, I would have had $2,200. But I sold early and just kept one to run. But I will be giving you different options I'll be in for the week. So next week, like I said, if you're actively trading, you'll definitely begin some trades. The option watch list I told you guys to build. Definitely check it out, look at it, put them on there Monday, Tuesday. If you want to throw some money in and you want some trades, contact me on the Discord. I'm in there most of the time. If you got me on Facebook, DM me, and we'll get it going. And that's about it. That's all I have for you guys today. So hope everybody enjoys your football games. Stay warm wherever you're at. Don't let your jobs fool you. They won't need you if it's cold. Just know that. And you just tell them I told you that. And I got a lot of excuses for a lot of people. You know what I mean? So if you guys need an excuse, you can put me down. But other than that, you folks have a wonderful afternoon. And I'll be here next week. Same bat time, same bat channel. And stop recording before I don't finish it.